I'm very pleased to welcome you to today's program. Welcome, I'll start again. Welcome to the Valley Economic Alliance Black Business Month series by Onyx, our African-American business hub. I'm Sonya Blake, President and CEO. Welcome to today's program. I know you're going to enjoy it very much, and we're so glad that you joined us. Feel free to register in the chat with your contact information. If you would like other participants to reach out to you, you can network and get in touch after the program. Use the chat to post questions as well for our great presentation. We will get to as many questions in the chat as time allows, and we welcome you to do that. A little bit of background: for 30 years, the Valley Economic Alliance has served our 5-city San Fernando Valley region, which includes the cities of Burbank, Calabasas, Glendale, San Fernando, and portions of North Los Angeles. The Alliance promotes job creation and retention through business assistance and attraction, workforce development, tourism, and so much more. Our goal is to foster a great quality of life in our region while we promote prosperous and environmentally sustainable and equitable development. We offer educational programs on topics to help Valley business owners increase their revenues, reduce their costs, and access capital. So now I have a couple of action items for you. I want to encourage you to visit our website, thevalley.net, to join our email list. That way you can stay up to date on all of our activities going on. Number 2, follow on Instagram at Alliance Business Help for updates as well, specifically on business resources and grants and tools and tricks. And then thirdly, you can email help@economicalliance.org if you are interested in customized free one-on-one business assistance. That is free, F-R-E-E, and that's always good. So I'm going to pop those in the chat right now so you have those to click on. So please note that this program is being recorded and will be made public for folks who couldn't hop on today. And we ask that you remain muted to reduce the background noise. Onyx, by the way, is one of our 3 affinity groups, and they are designed to close the information gap, the capital gap, and the network gap that's often experienced by women business owners and business owners of color. So I very much urge you to join and get active and involved with our Facebook group for Onyx here, and I'm going to put that link in the chat as well. Why is this important? You may be asking, why are we here? Well, I'll tell you why. The SBA, the U.S. Small Business Administration, reports that there are 2.6 million Black-owned businesses in the United States, employing 975,000 workers and generating $150 billion in annual receipts. I've got a little article that I want to put in the chat for you so you can see where you can learn more about the landscape of Black businesses in the US. Here in the San Fernando Valley, we at the Alliance estimate there are approximately 5,000 Black-owned businesses. Statistically, women and minority business owners tend to obtain less capital than average, a fact which can hamper their growth and might suppress the vitality of our local economy because these businesses aren't able to thrive and grow to their full potential. A great article by Fundera, a great article by Fundera talks about this. It cites a Federal Reserve study that reports 82% of white-owned businesses receive at least a percentage of the funding that they request from a bank, compared to 66% of BIPOC business owners. And for those of you who may not know yet, BIPOC is Black, Indigenous, or person of color. Another study found that the average loan size for small white-owned firms was over $30,000 higher than for small BIPOC-owned firms. And a third report by the Minority Business Development Agency states that minority firms paid about 7.8% in interest on average for loans, compared with 6.4% for non-minority owned firms. So these are some important distinctions. I'm putting the link to that article too for your reference at a later point. So these are important distinctions, and our goal here at the Alliance is to help all of our locally owned businesses to thrive and grow in the San Fernando Valley. And this includes empowering our Black-owned businesses with critical information and support to make competitive applications for available funding, to request adequate amounts of funding, and to obtain the best rates possible. Onyx is our vehicle to accomplish this in the Valley, and we encourage you to share what we're doing here with any and everyone you can think of to help us advance the work. We are thrilled with the distinguished partners that helped us present this program today, including Cal State Northridge College of Social and Behavioral Sciences, led by the amazing Dean, Dr. Yan Searcy. Also, the Black Business Association of Los Angeles, led by Skip Cooper, a dear friend and a wonderful leader, as well as the Greater Los Angeles African American Chamber of Commerce, thanks to Angela Gibson, who has really positioned their organization as a leader in helping firms win government contracts. And so now I want to give a special thanks to our sponsor and longtime supporter of the Alliance, HSBC Bank, represented on our board of directors by Forrest Hill. He's President, Cluster Branch Manager of HSBC Retail Banking and Wealth Management. Thankfully, we've also had the pleasure of developing this program in conjunction with 3 dynamic and committed women leaders at HSBC Bank, Marie Pedrosa, Keisha Buchanan, and Evelyn Escobar. Thank you so much to all 3 of you. Today, it's my distinct pleasure to introduce to you our presenter, Nick Williamson, Vice President, Business Banking Relationship Manager at HSBC Bank. A banking executive for 10 years, Nicholas brings a wealth of knowledge to help business owners better understand banking, credit, and business financing. Nick started in banking in 2011 as a personal banker with Wells Fargo. And within just 2 years, he was able to become a branch manager at Wells Fargo. He was a branch manager for 6 years before transitioning into a business relationship manager with HSBC Bank. Nick has a lifetime of experience with business since he grew up with a business-owned family. His parents owned multiple corporations, and he was able to learn how a business can be run and operated profitably and successfully. He also learned the importance of focusing on the financials, know your numbers, right, in order to help the business grow. He's been helping small business clients grow by offering their businesses the right solutions, the right funding, and the right services that will help them meet their financial needs. So his presentation is about 20 minutes long, after which we'll be taking some questions from the chat. So do feel free to type in your questions as they occur to you. We're so fortunate to have him with us to help demystify the topic of building business credit. Welcome, Nicholas.
Thank you so much. It's a pleasure to be here with you guys and to be invited to talk about credit. And I am really excited to go through this with you guys today. I'm going to go ahead and share my screen, and we'll talk about how businesses obtain credit. So with HSBC and other lenders, we do love talking about credit with our clients. We want to make sure that they are savvy when it comes to lending and lending opportunities that they have for their businesses. Let me make sure this is working. There you go. So what is credit? Credit is just another word for a loan. When a business enters into an agreement to borrow money from another entity or a lender, the business is using credit. There's many different credit options available to businesses, including business credit cards, lines of credit, revolving credit, and term loans. Determining the type of credit that is best for you involves assessing whether your needs are short or long-term, the amount needed, and many other factors. Many businesses that seek credit are for various reasons, which might include assisting with startup costs, purchasing new equipment, acquiring inventory, covering cash flow deficits, and even just building a credit history. What criteria do lenders use when approving a loan application? Well, we talk about the 5 C's, which is capacity. Capacity is the current or future ability to repay your loan based on your income, revenue, and future financial projections. Character, which refers to your history of delivering on financial commitments. Collateral. Collateral includes assets belonging to you and or the business that the lender can seize if you default on your loan. Capital. Capital is any funds that you have personally invested in your business and the value of your business assets versus its liabilities. This is a big one as well because a lot of clients do put in a lot of their own personal savings and cash into starting up their business. And even after that, continually investing more of their money into their business to keep it afloat and keep it going. We do look at that and we take what you do as your business owner, putting into your own individual business as a big part of how we can lend money to you. And the last one is conditions. Conditions cover external factors such as the state of the industry and economy and what the purpose of the loan is. What information might a lender use to determine my credit worthiness? Well, there's a series of things that we do ask for and want to review. The following list on the left side here is information you may be asked to provide or that the lenders may obtain through outside agencies. The first one is a business plan. We do want to know what your plan is for the business, what you feel that you are creating, how you're going to move forward, what the next few years are going to look like for you. Financial statements, and the financial statements could be something very simple, just like a profit and loss statement for the current year, a balance sheet of your assets and liabilities for the current year, revenue and sales figures, personal credit reports and score, and the business credit report and score. And when it talks about the personal and business credit scores, many businesses starting up do not have an established business credit. So what we do there, instead of just not going with the business, we actually go and look at the personal side as well. We can base a lot of what the business will do and how they will repay the credit based on the person or the owner and their personal credit reports and scores. Income tax returns. This is a big one, obviously, to understand how the business is working, how much gross sales or revenue they are making. And then minus all the expenses and cost of goods, what is the net income? That's a big factor of what we can look at on how much we can actually lend to that business. Bank statements. Of course, we have the tax returns that can tell us how much they're making, but the bank statements tell us how well are they managing their money? How well are they able to use their money to continue to save, or are they having a hard time being able to keep money in the accounts? Resumes for you and the business principals. So sometimes when it's a startup, we do want to ask what your resume looks like. So we'd ask for you to send us a resume of yourself and or other owners of the business to understand where the background comes from. This is also, again, especially with lenders, we don't want to just decline people. We want to find the best option of how we can help. And when it's a startup business with no information on sales or very little to go on, we want to look at your resume and how you have expertise in that area of business that you're starting. List of assets that can be used as collateral. And like I said, the 5 C's in the past, one of them is collateral. And many times we can go off of and use collateral to approve a lending opportunity for the business. Legal documentations such as patents, leases, licenses, and etc. If you have, let's say, for example, you work with the state of California and you have specific contracts with them, we can use those contracts to help approve lending opportunities for your business. Patents and leases. If you create a product that you have a patent on, that gives more credibility to you and the business because you have that patent on your product. When you apply for a business loan, the lender will request information that they can use to assess your credit worthiness. Different lenders will request different documentation, and some lenders require much more information than others. Audited financial statements provide much more assurance of your company's financial health, but the auditing process can be lengthy and expensive. I'm going to talk about that really quick. The audited financial statements, what that means is you can technically go to your CPA or accountants, and they can do a full audit on your financial statements and certified and everything by them, stating that this is accurate and 100% ready to go. Sometimes you can do that, but keep in mind, the process can be lengthy because you do need to go on their time and have them work on it for you. And also it can be expensive. They will obviously charge you for those documents, But in addition, the audited financial statements are not always required. That's only a better option if you feel that can provide more of clarity for the lender to look and improve that lending opportunity for you. So what is a business credit score? Lenders will probably look at both your personal credit score and your business credit score when evaluating your application. Your credit score provides lenders with a rating that reflects your credit worthiness. The higher the number, the more likely you are to pay back your loan on time. Your personal credit score can be calculated by different organizations, such as FICO, and it's typically a numeric value between 300 and 850. The business credit score is calculated differently and also by different businesses. Popular ones are Dun & Bradstreet, Experian, and Equifax. Values may range from 0 up to 992, depending on the business. If your company has never applied for credit, you may not have a business score. Starting a positive credit history may make it easier to obtain higher lines of credit and could even lower insurance policies rates. And as you can see on the right, it does have that graph. It shows the low end of the credit score of 300 and 850 as the high. Many of us, if not all of us, will know what this means because this is the range for the personal credit score. Obviously, in between the 300 and 580 is a poor credit score, 580 to 670, fair. 670 to 740 is good, 740 to 800 is very good, and up to 850 is exceptional. This graph and this range is very similar to what the business credit score will look like, but a much larger range from 0 to 992. So where can I get credit? Banks and credit unions are the traditional sources for small business loans, but they are not the only lenders. Alternative lenders are becoming more mainstream and offer flexible credit options that fit the needs of many small business owners. Some examples of alternative lenders include online lenders, such as peer-to-peer and business-to-business lending. For example, a lot of times we can have vendors that we work with that will offer credit to us as business owners, or even other business partners from other businesses can offer lending as well, or payment plans and such. Both traditional lenders and alternative lenders have their advantages and disadvantages. So what should I look at when comparing loans? Choosing a lender and credit type that best meets your funding needs is really important, but your research shouldn't end there. Be sure to review the following credit terms before you sign on the dotted line. 3 main things you want to always consider when you're looking at lending is other fees that might not be straightforward and upfront. So other fees may be attached to credit in addition to an interest rate. These could include origination fees, underwriting fees, and closing costs. The APR, or annual percentage rate, is calculated with these fees in mind. The interest rate. Interest rates on business credit vary greatly by type and lender, with rates from as low as 2.5% to as high as 100%. When a 1% difference in interest rate could save you thousands or hundreds of thousands of dollars, this should be a top consideration. Now, when you think about the interest rate and the previous other rate, APR, or annual percentage rate, you'll most likely see both of those things on paperwork when you're talking about lending and looking at your loan opportunity. Interest rate, keep in mind, is your flat, straightforward interest rate that you will be paying on the amount you're borrowing. You'll also see that APR, annual percentage rate, right below that. And it might sometimes be a different number, it might be a slightly higher number. And that is because there are other fees attached and associated with that lending piece. So when you see that, you do want to ask questions. Well, what else am I paying for? Are there closing costs that we're rolling right into my loan? Or are there origination fees that I'm paying for? And many times there might be those things happening. You can have an option of paying up front or having them rolled into your loan. Terms and restrictions. Review all the fine print in the contract and make sure you are comfortable with all terms and restrictions set by the lender. Collateral. Secured loans require borrowers to pledge an asset as collateral, which the lender can seize if you default on the loan. Remember, this is one of the 5 C's we talked about. Be very certain you are willing to risk the loss of whatever asset you pledge and make sure you understand the terms of seizure. Down payment. Sometimes a lender requires a down payment on a loan. Be certain that you have capital needed to cover this requirement. So what should I know about interest? Even interest rates that seem low can end up costing a business a lot of money over time. This is why it's important to understand the different types of interest rates and how they are calculated. Interest is calculated as a percentage of the amount borrowed, and for businesses is usually compounded. While simple interest is calculated using only the principal, compound interest is calculated using the principal and any outstanding interest. How do I know how much I can borrow? This is a big question a lot of business owners do have. And a lot of times we go in not knowing that how much we actually need to borrow. Lenders will only allow you to borrow an amount they believe you are capable of repaying. Many use a formula called the debt service coverage ratio to determine this amount. Using the DSCR prior to applying for credit can help you figure out a loan amount to request that is within your company's means. Generally, lenders are looking for a 1.0 ratio. A debt service coverage ratio of 1.35 is much more desired. Now, this is where people do get confused. What is a debt service coverage ratio? How do I calculate that? Well, it's very simple. What you do is you take your net operating income for that previous year, for example, on your last tax return. That is after paying everything. That's what goes into the business's pocket after paying taxes, employees, all costs of everything for the year. You take that net operating income and you divide that by the total debt service, which also is the amount that you're paying on debt for that year, those 12 months. You take the net operating income divided by the total debt service, and you get your debt service coverage ratio. If you're within that 1.0 and 1.35, you're looking really good. If you're over the 1.35, that just means something better. It means you have a lot more available cash to where a lender can feel more comfortable lending that money to you. What if I'm having a hard time getting approved for credit? This does happen, and it's a real thing. A lot of people apply for credit and they do not get approved. Well, there's many reasons why you may be having trouble getting approved for a loan. For example, your new business may not have established a solid financial history, or you may lack enough documentation to convince a lender of your creditworthiness. You may even have a low credit score due to some past financial mishaps. If these problems sound familiar, don't lose hope. In addition to alternative lenders, there are other programs available that are designed specifically to help businesses succeed. And this is what I tell my clients all the time. If for any reason we are not able to get the loan approved, don't lose hope. We do have other options and other companies that we work with to be able to help you. Here are some examples of who we use and who we can work with if a traditional lender, such as a bank, credit union, are not able to approve that loan. Community Development Financial Institutions, CDFIs we call them, offer U.S. Department of Treasury funded loans in low-income communities or underserved populations. An example of these are PACE in the LA area and also Lendistry. Those two companies we work with personally, myself, for clients that I'm not able to approve lending for. SCORE is a nonprofit organization that is a partner of Small Business Administration and offers free mentoring services to small business owners. Mentors are volunteer experts who are committed to sharing their knowledge and experience to help other small businesses thrive. And in addition to that, we always still have the Small Business Administration loan. The SBA loan is a great option for clients that are not able to get traditional lending approved. The SBA, which is government-backed, does promise to pay back the portion of the loan if you default on payments, which means that the SBA will work with banks as well and offer an SBA option of that same loan that you're looking at. And then the bank will feel more confident in being able to do the lending for you because it's going to be backed by that SBA. So key points of obtaining business credit. There are lots of important factors to think about as you go through the process of obtaining business credit. Here are a few tips to consider. Maintain strong financial records. Lenders will assess various financial statements when you apply. Make sure you have your documentation in order. Lead by example. Remember that your personal financial history may be considered when applying for financing. Don't give up. If a traditional lender does not approve your application, look into building up your creditworthiness and reach out for support from small business organizations. All right. And just to share my contact information as well at the very end here's my contact information. If you do have questions or want to reach out for any additional information or questions as you have. In addition, our other community development relationship manager, Evelyn Escobar, who's also on the call with us, in case you want to reach out to her as well. Everyone, I want to thank you for the opportunity to talk about lending with you and talk about how to obtain credit and the things we look at as lenders. I do want to make a point that the most important thing here is not to give up hope. Just because you might not be able to get approved right now does not mean you can't get approved ever. It means that there's other things out there that we can help you with. We can try and get you involved with other institutions that will help teach you, help coach you through things. And like I said on the very last page, we talked about the tips. One of the most important tips for me is your personal financial creditworthiness. Not only the business, but we want to look at also your personal. So if your business does not qualify, we can go to your personal side and be able to approve the loan based on your creditworthiness personally. So thank you so much, and I will turn it right back over.
Thank you, Nick, for that insightful and informative presentation. So very helpful. So I would like to get us started with a question. So, this being our Onyx program, we're thinking a lot about this wealth gap and capital gap. And many times people of color have been severely under-resourced and don't necessarily have the assets or the network of friends and family to invest in their businesses. So what do you suggest if a business owner does not have the collateral, for example, or may not have a sizable or adequate down payment? Are there some alternatives or ideas that you recommend?
Great question. And the first thing I would ask is what type of lending are they looking for? Because it really depends. If they're looking for equipment lending, for example, to buy a vehicle, well, the answer right there is your collateral is the vehicle. It's just like buying a personal car. Banks lend money to buy yourself a personal car because they are putting collateral on top of that car. As far as not being able to have a down payment, that's not always necessary. And it's very, very rare to have a down payment specifically for small business lending. When you're looking at a down payment, that's typically for buying a property, for example. If you look at the personal side, buying a house, you need to have a down payment of some size to be able to put forward to buying that house. Same thing on the business side. If you're looking to buy a commercial property or you're buying a warehouse for your business, there's going to be a requirement for that down payment. Now, when it's talking about specifically just small business lending, as far as a small business loan or a line of credit, you don't necessarily need that. We will approve 100% of that loan. You don't need to have a down payment. And many times you don't need to have collateral for the small business loan as well. So when you say, I might not have down payment, I might not have collateral to be able to put up, those are for specific things. And if you do have a specific need that requires that, we can work through that. There's might be some other options we can work at. When it comes to small business loans and lines of credit alone, we don't need to look at those things. We actually look more at your personal history of paying back your credit, looking at the financials of the business and how successful they're being so far. And in addition to that, I do have a client that I was able to approve a line of credit for purely at zero net income. Did not make a cent for his business yet. And we were still able to approve a loan. And the reason by that is because of his history of his personal self, what his resume looked at, and the industry that his business was in. In addition to that, he had contracts with the state of California that proved to us that he already had won those contracts, and he has dedicated and for sure income coming in from fulfilling those. And what he needed was the money to be able to fulfill the order. So we look at a lot of different things as far as myself. Other lenders might do the same, other lenders might not. And that's when it comes to what lender is the best for me. You need to look at everything that the lender offers, what type of lending they offer, what requirements they want, what the terms and conditions are. There's a whole lot of things you want to look at. But to answer that question, there's so many different options out there for you. We will find the best thing that fits.
Great, great. Next question. We do, as the Alliance, we partner with organizations like Operation Hope and their financial health consultants and credit counselors when business owners have a need to repair personal credit prior to seeking business lending. What do you recommend, if anything, for people who are looking to repair personal credit?
That's a great question. So I specifically work on business, but to be able to work on your personal credit and your business credit at the same time, for example, a couple of the CDFI companies we work with, like I mentioned, Lendistry and Pace, we actually have a program set up where we give out grants to those companies, and we would refer you as a business owner to them. What they do is they meet with you as a business owner, understand your business, and they will put you through financial courses. They will teach you about credit, teach you about how to manage your money and manage yourself, and how to rebuild your credit. And when you're finished with that program, what they do next is they take the grant money that we give as a bank, and they send your name and your business back over to us. And what we do is we offer you a secured business credit card, which they put up $500 from a grant towards your business from that company. And you as a business owner is required to put up the additional $500. So we basically do is we give you a secured business credit card for $1,000 with that $500 on both sides, and it starts building your credit for you. Credit bureaus don't look at it as a rebuild credit card or a secured credit card. They look at it as a regular credit card, which means it starts building your credit from there on out as a normal credit card does. After about a year, Lendistry or Pace and ourselves will revisit the business and see how well they've done with the credit card, and we'll transition that into a traditional unsecured credit card. And even then, be able to have options for you to have either a line of credit, a loan, and other things that are available to you at that time. So when you are looking at to rebuild your credit, that's probably the thing I would do is go straight for that, the secured credit card. Now, it does require that you put up some of your own capital in cash. You don't lose the money, but you are using the money on a credit card that starts building your credit back up.
That's great. That's great. I was just making note of that here, typing that in. And so follow-up question, how do people get information about that secured credit card or other secured credit cards that you are aware of?
So for us, the secured credit card we offer is specifically just for that program. We work specifically with Lendistry and Pace. So you can go through Lendistry and Pace and reach out to them directly and mention the secured credit card with HSBC. Other banks do have secured credit cards as well, and they advertise it on their websites. It's a little bit different because we offer the program specifically with a grant, so you don't need to put up the full amount. Other banks might not have that option. So, oh, sorry, I just saw Evelyn's comment. So that's what I would suggest is look online and look at those websites for Lendistry and Pace, or you can look at other banks as well because they do offer that. Not every bank offers a secured business credit card, but I believe every bank just about does offer a personal secured credit card. The best thing about the business one, though, for me, is it builds your personal credit and your business at the same time.
That's great. Okay. And for everyone to know, at the Alliance, we do have great relationships with Lendistry and Pace as well. And so if you send us an email, we can do a warm email introduction for you to connect with our contacts at those two. And you can talk specifically about what's possible with that secured credit card, if that's of interest. And then another question for you. Something I mentioned to you before, Nick, that I really wanted to have us talk about in this forum. And that's, you hear about this notion of building business credit on a separate employer ID number issued through the IRS. which is not connected to your personal credit and your social security number. And some folks are building whole separate profiles that don't depend on their personal credit score being at a certain level. Is that really legitimate? Is that real? Is that a thing? Tell us about that whole process.
So good question. Let me, if you can re-say it for me, because I want to make sure I clearly understand.
Oh, sure. So there's, sometimes you see on the internet or you hear people talking about, building business credit. And some people are even charging for assistance in building your credit. And it has to do with, you set up a corporate entity, like set up a corporation. So it's not on your social security number. It's a completely different company. And then you start off with maybe a secured credit card or a store card at Macy's or Home Depot. And then you start to work up in kinds of credit cards and lending and things like that.
Yeah, that's a great question. And actually, I'm sure I've seen that plenty of times online. I'm sure many of you have as well. And keep in mind, when people are saying, hey, we can help rebuild your credit, or we can help build your credit for you, a small fee, by the way, but we can do that. And what we do is we set up a corporation or a different entity that's not assigned to your business, your name, or your personal social security number. Well, that's just called building a business. Don't let them scam you, by the way, because it's very simple. You set up a corporation or an LLC or even a sole proprietorship, and you have an EIN number, which is an employee identification number with the IRS. That's legitimate. That is legitimate. That's what you do to build a business. But you don't need to have someone do that for you, because when you apply for a credit card, for example, with a bank, and you're applying under the business name and EIN number or tax ID number, you still, as an owner, need to be attached to that. You, as an owner, still have your personal name and social security number attached to it. Now, it doesn't mean that, we're always going to look at the personal side first. We look at the business side first. And if we can approve the credit card, for example, just purely by looking at the business, then we'll do that. And it starts building credit for your personal and business because it has your name attached to it. Going to a department store like Home Depot or Lowe's or, anywhere else like that, those are always good to have because of the perks they might offer at those stores, but they're not the same. A department store will, for the most part, always approve you. And that doesn't mean that it's actually helping build your credit the way you want it to. Credit bureaus look at bank lending as a more stable and real lending opportunity for clients, which means that when you have a business credit card with a bank or other financial institution, it starts building your credit a little bit more. They're also able to provide you with more information and more lending as well. So when you look at a department store, for example, as Home Depot or Lowe's, you can have those, but they might not build your credit the way you think.
Good to know. Good to know. Since we're talking about cautionary notes and things like that, and warnings and red flags, I wanted to bring up predatory lending. So oftentimes you also see online about getting loans very quickly. Sometimes bank loans or the alternative lenders, there's a process there and they may take some time. If it's an SBA loan, and maybe we should talk about that a little bit too and how that figures in. But before we get to that, I'd love to hear, how do you know if it's a predatory lender? Do you know?
Great. That's a great question. And that's one of the points we made in my presentation is understanding all the terms, conditions, and fees that might be associated. So a predatory lender, if everyone doesn't know, is any lending practice that imposes unfair and abusive loan terms on borrowers. For example, those quick payday loans, or you can go to, loan places that use your car as collateral. A lot of people go there. A lot of people go to these payday loans. And some of them are larger companies that provide thousands of dollars, not just a small amount, but $50,000, $100,000. When we talked about interest rates on my slide, it talked about interest rates can range from 2.5%, which is very, very low, up to 100%. I'm not sure if anyone caught that. 100% of your loan will be 100% interest rate. That's outrageous. So if you're paying them $500 towards the principal every month, you're also paying $500 of interest. So it's doubling your payment. Now, the way to look out for that is the things that you will, you're never going to get that at a bank or a financial institution because they're regulated by the government, by the Federal Reserve and everything as well. We have caps on specific spots. When you go to a payday loan, you have to be very careful. That's where you're going to get yourself into trouble. And speaking as a lender and someone, personally thinking about this, I would never go there. You're going to get yourself in so much trouble. I know people personally that are still in debt because of these places when they charge 100, 150%, 200% interest rate on your lending. You're basically paying them over and over and over again, and you're never going to get out of debt. So my advice would be always to stay away from those. The first thing you should always do is go to your bank or your other financial institution like a credit union. Go to your bank, ask them for help on the lending, review their terms and conditions and fees. And if that doesn't work or you might not get approved, again, there's other options. And the other options are SBA, the CDFIs like Lend History and PACE. There's other options that are still going to be helpful and not overcharge you like we're talking about with predatory lending.
Fantastic. Fantastic. Last question I have, and then I'll open it up if others would like to maybe ask a little or share a little. SBA loans, can you talk about that a little bit? We know that the SBA offers loan guarantees at times. They don't actually have the funding, but they guarantee the funding from a bank for a bank loan for a banker to feel more confident that they'll get repaid should the borrower default for whatever reason. But can you talk about when should or shouldn't a business owner think about applying for or pursuing SBA loan?
Sure. Yeah, great question. Many banks, if not all banks, work with the SBA. And you want to think about when you talk about the SBA, it is going to be it's a backed loan that the SBA is going to support you as a business owner, backing you to the bank. So basically, for example, if you come to the bank and say, hey, I need $100,000 of a loan, and the bank says, okay, well, looking at this and that on your financials, we might not be able to do it, but we can go with the SBA route. The SBA route means is that the SBA is going to come out and help support you in that $100,000 request. What they're going to do is they're going to guarantee to the bank that if you default or stop paying the loan, that the SBA will go out and pay the bank the remainder of what's due. Now, the difference is conventional loans or conventional lending, as far as there's a straight line of credit or loan with a bank, you're going to have lower interest rates. You're going to have a shorter period of time of being able to get and obtain the lending versus going with the SBA. SBA, they're limited on what they do. They do SBA 7A, which is just a straight business loan or line of credit. And they do SBA 504, which is commercial lending. So if you're buying that commercial property or you're buying a warehouse, things like that, you can use SBA as well. Sometimes the bank, because of the size of the loan, won't even think about going conventional. We're going straight with SBA because of the size of the amount of lending you want to try and achieve. Now, with the SBA, if you do go that route, the interest rate will be slightly higher and the process will be longer because there's other additional forms that you need to fill out and sign. And we have to go through the SBA for approval on everything as well, not just through the bank. So there's give and take on both sides. There's great benefits. There's also some disadvantages because of time and extra cost of that interest rate. But it is available for clients, and it's also a very good option when you might not be able to get approved by a loan straight with the bank.
Mm-hmm. Quick follow-up question. When you were saying the size of the loan is a factor, is it if the loan is particularly large or particularly small that it lends itself more for an SBA loan?
So typically when it's large, for example, each bank has their different caps of what they want to go up to without going SBA. For example, myself and what I do as a lender with HSBC, at my level, I go up to $350,000 straight conventional loan, so non-SBA. Anything over 350, we go with the route of SBA because of that size. So if you're going up higher and higher, you want more money or you need that more capital, SBA will be involved for that. Now, sometimes, like I said, even if it's $100,000 and we feel that we won't be able to approve it as just a straight lender, it's $100,000, we'll offer the option of going down the SBA route to the client, and SBA will get involved at that moment. So it's not necessarily only at that one limit. It can be lower or higher, but typically when it goes higher, we most likely will go SBA no matter what.
Great. Okay. Super helpful. All right. Got it. So those are all the questions that were burning that I thought the group might want to know about. I also want to share that we do have some great CDFI partners here with us on the call. And since we have a couple of minutes additional left over the time, I'd love to have maybe them come off mute if they wanted to say a few words and share a little bit with us. I saw Richard Palais from AMPAC is on. I saw Marcel Watts from CDC Small Business Finance. No worries if you guys are not able to come off mute and share, but you're welcome to at this time. They're going to be speakers at our next event next Thursday, same bat time, same bat channel, and they'll be talking more in depth about what they do. But since Nick was so kind to bring up some of those great resources on CDFIs, I wanted to make sure that you knew that there are some other ones here to kind of learn about. So, hey, Richard, good to see you.
Good afternoon, Sonya and audience. Nick, thank you so much for an outstanding presentation. It was right at the level of where our small business owners are, and that's what's so critical. I've been a banker myself in the past, and when we speak our banking language to all of our small businesses, they sit there and say, I know you're smart, but I have no idea what you're talking about, and I'm too afraid to ask you any questions. So thank you for making it welcoming and practical, and follow along, right? As easy as ABC. I am Richard Palais. I'll see everyone next week, but I really, Sonya, wanted to come on to thank you for this series and to thank you for bringing such a guest as Nick Williamson, in the presentation you gave today. That's all I wanted to say. Thanks.
Oh, Richard, I appreciate you, man. Always appreciate you. Thank you. And Marcel, you're here. If you want to say a few words, you're welcome to. There's also Selena Davis. I'm going to show the group. This is for our next program. Before I even go on to that, though, I would like to just again, thank you so much, Nick, for the presentation. As Richard said, it was just so accessible and just content rich, packed with information, just exactly what we needed. So I really, really appreciate that and look forward to, follow-up questions and more conversation about that. So thanks so much.
Thank you.
Awesome. So I do have a couple more comments to share with folks. Very important information for you to learn about. So Onyx is a group. It's not just an event or a series of events. It's a group. And we want to encourage you to hop on our Facebook group so that you can stay connected with the network. You can network with other business owners. You can get information on the latest grants. I had put in the chat our Instagram handle also, where you can connect with various grants and resources and such and so on. You should be able to save the chat and be able to look at that later. But next week at this time, Thursday at noon, we're going to continue our Black Business Month series on financing your business. So now we talked about the basics of building your business credit. Now we're going to get into what actual loans and lending products are available. And so we're going to have some folks sharing about that from some CDFIs. So we welcome you to join us for that. And then the following week, August 26th, we're going to have marketing for growth. And we're going to have a great presentation on that. Once you get your business situated with some funding and you need to go ahead and generate some clients, then you want to start to look at how to market your business. So you'll see that. Also on September 1, I want you to know about our Valley Capital Conference. So that's where we're pulling together a variety of lenders who are going to come and talk about that. We're going to have breakout rooms and you're going to be able to talk specifically with them and get more information about lenders as well as a panel talking about angel investing. So we'll get into different types of financing so that we can really we can be in the room where decisions are made. So we're super excited to share that with you on September 1. Make sure you visit our website at thevalley.net/events so that you can keep up to speed on when events are taking place. And in the next week or two or day or two, we're going to be sending you a survey about the program. We want to know what you thought about it, how we can improve it, what would work better for you, what more information, what lingering questions are left in your mind. So be sure to look out for that. And if you would, go ahead and give us that feedback. I think that covers the bases, except just thank the team. I really want to thank Erica and Rachel and Jackie and Angela and Brett for all your great work and keeping us going. With that, Nick or Evelyn, any final comments before we sign off?
The only thing I would say, guys, is thank you again for allowing me to present to you today. Looking forward to any additional questions you guys might have. My email I gave out previously, and if you don't have it, Sonya does have it as well, so she can give that out to you. But good luck to everyone, and I hope to see that you guys are prospering in your businesses. And if it's a startup, good luck with everything. I think more businesses, the barrier. The LA area and all of California does need more great businesses out there. So looking forward to your success.
Oh, thank you so much, Nick. We appreciate you very much. All right, everyone, enjoy your day. Keep it close to the Alliance. We're a team, a family here in the Valley, and we look forward to being of service to you. So take good care. Have a beautiful day. Bye-bye.